All the gains we saw yesterday in the market were all evaporated this morning. Why? What the heck is happening? Well, same thing over and over. Same story, same old, same old. People are very uncertain. People are fearful about what is going to happen, when it comes to the economy, growth in the economy and recession fear. So it doesn't help. And it's all technical at this point because yesterday we shared and on the video we posted around the market coverage that whenever we have interest rates increasing, we also have the dollar increasing and we also have stocks selling off because people are taking money off stocks, equities, and they're putting into bonds, pushing the yields higher and higher. And as we get to yields or bonds, that is the interest that you get as a reward when you put money into a US Treasury, a paper or a bond, then at the same time as those interest rates hit new highs, at the same time equities are hitting new lows. If you look at the S&P 500 today, man, we hit new lows. Look, 52-week low, 359.70. This is exactly the lowest we hit this morning, or today during the session, 359.70. If you look year to date, the S&P 500, which is kind of usually used as a reference of the US stock market, it is down 24%. That is way beyond the 20%. Now, as as far as mainstream media and everybody is kind of screaming bloodbath, everything is just pure negativity out there in the market, I want us to have a different perspective because if you are reading between the lines, if you are smart enough to know exactly how to embrace these type of market conditions, you can position yourself now and make a lot of money as we get to the other side. In this video, I do believe that we are kind of reaching to that kind of bottom level where we are already looking at a reversal coming. But if you look into something that is happening, which I believe is going to be a huge catalyst pushing the markets upwards, we can have some good news, as I mentioned, if we are smart and position ourselves now, because these, downturns, they never last forever. The market operates in cycles. Last year the market cycle was up, but today, since this year, everything is down. So this is the news I got this morning. China tells state banks to prepare for a massive dollar dump, and the yuan buying spree as Beijing's prior interventions have failed to stem its currency's worst year since 1994. People, this is huge. This is huge. All right. I'm going to share with you exactly in this video how this and what this means for the market, for the US stock market, but how we can even go a little bit further in leveraging this, capitalizing this, next event that's going to shock the market one way or another in order to make us, a lot of money before the end of this year. All right. Now, Reuters reported that China told his state-owned banks to get ready to sell dollars and to buy the yuan in an effort to prop up the local currency. It's been almost since 1994 that China is trying to put his currency, the Chinese yuan, into the top of the international currencies, but it's not working. But now with inflation and what the Federal Reserve is doing, the dollar has reached new all-time high. The dollar has never been this up since the last 20 years. And that means that all of the other currencies are just struggling hard. Look at the gilt. Look at the pound. That's the UK currency. Look at the yuan. That's the Chinese currency. Everything is just dumping. Now, what is really interesting about this news is the fact that China is the country with the most huge amount of dollar reserves. Every country has, currencies reserve, because when people travel and everything, when you go to change or exchange a dollar for a euro, a euro for a pound for, the yuan or the yen or the, Canadian dollars, all of these trades, all of these exchanges, the currencies are being kept in what we call the central bank reserve. That's another way for them to, kind of pound into a currency reserve which operates such as an emergency fund. Well, not really an emergency fund, but let's just call it a war chest, because they can use it in some specific situations in order to kind of play with what is happening in the economy. All right. And right now, China has the ability to use that huge amount of dollar reserve because they are the biggest owners of dollars in the world in terms of countries. If they sell it, it will bring a huge amount of pressure on the dollar. And by buying, the yuan, then everything will be prepping up in kind of finding that balance. All right. Now, the move could stem the yuan's fall, and it remains on track for its largest annual loss against the dollar since 1994. A hawkish Fed has pushed the dollar to a 20-year high this year, pressuring currencies around the world. Now, this is where I want us to be really pay attention. Because these guys are preparing to share the dollar, while snapping up offshore yuan. The scale of this latest effort to prop up the yuan will be and could provide a floor to the Chinese currency, because they don't want their currency to be less valuable. All right. Now, the amount of dollars to be sold hasn't been decided yet, but Reuters said it will primarily involve the state bank's currency reserves. There are offshore branches, including those based in Hong Kong, New York, and London. They were ordered to review offshore yuan holdings and check to see that dollar reserves are ready. This is something that's going to be one of the biggest, transaction of this kind. Now, what does it mean for you and me as investors, especially with stocks mainly, with assets mainly in the US stock market? Now, one of the main reasons why the stock market has been selling off literally, it's, as inflation fears, recession fears, but everything is kind of intercorrelated with what is happening with the dollar as a currency and what is happening with, interest rates. Whenever interest rates are pushing up, you can expect the currency, which is the US dollar, to also push up. These two are getting and flirting with new highs. Stocks and equities are pulling back because the money that people are pushing into those two assets, the bond market and the currency market, is the money that is being taken out of equities, also known as stocks. All right. Now, if the reverse happens, meaning if the dollar is decreasing, if the bond market yields are decreasing, it means that people also are taking money off of that because they think, they're coming back down. So it doesn't make sense for me to remain invested. I take my profits off and I go back, and go put it back into equities. And all of these are pretty much based on algorithms. So it's just a matter of, formulas, or everything that's been automated, automations. If this goes up, boom, I buy. If this goes down, boom, I sell. So as these two are continuing to sell or are, kind of expected to, sell off, we can expect equities, stocks to also start pumping back up. Now, remember, something to also keep in mind is September, historically, if you look at pretty much the last 25 years on the US stock market, September has always or tend to be always be one of the worst month for stocks, because it's the month where we have some of the big sell-offs in the entire year. And this September didn't really make an exception because, again, as we saw, the S&P 500, the Dow Jones, the Nasdaq are hitting new lows. Now, another sector which is definitely way more interesting than just, buying the whole market of the S&P 500 ETF or maybe others. We are also kind of getting into what we call the cold season. As we get into winter, we also have the Nordstrom Pipeline over in Germany, which is the biggest pipeline where gas is being transported from Russia to Germany and to the rest of the European Union. With the damages, they're saying that it may not come back up for, a couple of months. That means that the price of gas is going to go up again, and some people are thinking that we might have $8 gas prices by Memorial Day or by Christmas. That means that energy as a sector is going to be one of the sectors with the most amount of headwinds as we get into this later part of the year. If you look at the technicals now, and by technicals I really mean looking at the performance from the market and compared to the energy sector. this is the S&P 500. If you look at the year to date, it's down 24%. This last month, it's down 9%. For the last 5 days, it's down 2%. Now, let's compare the energy sector, XLE. This is the ticker. Year to date, up 27%. For the last 6 months, down 6%. This last month, down 10%. For the last 2 days, almost flat. I mean, last 5 days, almost flat. And today, pretty clear flat. If you look at yesterday and today, when the market was setting off, energy stocks were pretty stable because the market is really anticipating what's going to happen with, the correlation between the VIX reaching almost new highs for the year, 34, 36, but also what I just mentioned here around China. So it's just a matter of making sure that you guys are ready and have some cash on the sideline. If not, as of me, I already have my positions, which I'm, with the market set up recently. Already bought the dip on some of the energy sectors, and crypto, because I do believe as interest rates begin to decrease, begin to sell off a little bit, then definitely crypto is going to be one of those sectors that will be hugely impacted. But energy is definitely one of these sectors that I do believe not only is going to protect your money as we get into these next 3 months, this next quarter, but also because of what China is about to do, because of a low dollar, a weak dollar, or a dollar selling off means that it's easier and more profitable for the commodity market, for the commodity industry, for people selling commodities that are labeled into US. And the petrodollars is definitely on top of that list. So I'm prepping and I'm already kind of, ready for it to happen. It's just a matter of time. So as we get into October, let's see if, this holds true, with September being the worst day. But I do believe that we may have some news coming up, maybe in the next week or so, that will prop the market back up again before we get to the new year. Now, the question is, will you be ready? There are 3 other assets that I do believe can also help you protect your money if we get into a deeper recession. But that will be for another video, so make sure you're subscribed not to miss it. I'll see you in the next one, folks.